Okay, so today we're going to dive into something that I think a lot of people are really interested in right now, electric vehicles. And we're going to talk about stocks
Yeah.
specifically.
Absolutely.
You brought a really interesting article from the Motley Fool
Yeah.
that puts two of the biggest names right now, head-to-head, Rivian and Tesla. And what I thought was really interesting about this is that it's more than just kind of the surface level stuff about how many cars they're selling.
Exactly.
It really gets into some of the nitty gritty that I think is super important if you're actually thinking about putting money into these companies.
Yeah.
So that's kind of our mission today is to really extract those key considerations for investors who might be looking at these two companies.
Yeah.
So let's jump right in.
Well, I think what jumps out right away from this article is how the market is treating these two companies so far this year.
Yeah.
Tesla, obviously, the big player in this space, their stock is actually down a pretty significant amount, 42% year to date.
Wow.
Which, is interesting, especially considering, we had the election back at the end of last year. There was, sort of a bump there.
Right.
But
overall.
Yeah, overall down
Okay.
pretty significantly.
Yeah.
Rivian, on the other hand, much smaller company, obviously, but their stock is only down about 16%.
Okay.
So I think that tells us, something right there about how the market is viewing each of these companies right now.
Yeah, and it seems like with Tesla, it's always been a little bit more than just selling cars. Right.
For sure.
I mean, way back, when Elon Musk was first kind of, making these predictions,
Yeah.
it was these massive numbers that nobody thought could possibly happen.
Unthinkable numbers.
Like 20 million vehicles by 2030 or something like that.
Yeah.
He's kind of
Walked that back a bit since then.
walked it back a little.
Yeah.
Like,
But you're right. It's always been
it was always about this bigger,
more than just cars.
yeah, this bigger vision.
It's like a tech company almost.
Yeah.
Yeah. So, I mean, if you look at where they are today, though, as a business, they're actually doing pretty well in terms of profitability.
Yeah, they're not.
Yeah.
It's just a flash in the pan startup anymore.
Not at all.
Like they're
In 2024, they brought in over $7 billion in net income.
wow. That's a lot of money.
And $3.6 billion in free cash flow.
Now, free cash flow, for folks who might not know, what is that?
Yeah, so free cash flow is basically the money that a company has left over after covering their operating expenses and capital expenditures.
Okay.
So it's really the cash that they can use
To
actually invest in growth.
Invest or give back to shareholders in some way.
Exactly. So that's, a really important number to look at. And
They've got a lot of it.
they do. They've got a ton of cash on hand.
Yeah.
$36.6 billion at the end of last year.
Wow.
So, I mean,
So the car business is working.
the car business is definitely generating profits.
Yeah. And here's where I think it gets even more interesting, is they're not just relying on EVs anymore.
Right.
The article talks about how their energy storage business had a record year for gross profit in 2024.
Bruh.
And then you've got the stuff they're doing with artificial intelligence.
Right.
I mean, self-driving EV taxis,
Yeah.
those humanoid robots that they're developing.
Yeah, those are pretty wild.
They apparently increased their computing power for AI training by like 5 times.
Yeah, 5 times last year.
It's crazy. I mean, so when you think about, your investment and where it might be going,
Yeah.
this is sort of a double-edged sword in a way.
Right.
Because on the one hand,
It gives them options.
it gives them options.
So, yeah.
Avenues for growth outside of just the core EV market.
Which could be really important if EV adoption slows down or
Totally.
if competition, gets even more fierce.
Exactly.
But on the other
You're
hand,
not just evaluating a car company anymore.
right.
You're trying to assess their potential in energy,
Yeah.
in cutting-edge AI,
And those are
which are very different industries
different.
with their own sets of challenges and competitors.
Yeah.
So it just adds a layer of complexity.
Yeah.
For sure.
And speaking of complexity, the article brings up some really interesting things that I think are, beyond just
Beyond the numbers.
Yeah, the numbers.
Yeah.
Elon Musk's, increasing visibility and political discussions and things like that. Like that's
That's something that investors have to consider now.
Yeah.
Like, how does that affect the brand?
Exactly. How much weight do you give to the influence
Yeah.
of a company's leader
Yeah.
on its brand and its market perception?
Mm-hmm.
You know, when a CEO becomes as polarizing a figure as Elon Musk has,
Yeah.
it can really affect how different groups of consumers
Right.
view the company's products.
Yeah.
And it's a less tangible risk, you know.
Yeah, but it's real.
But it can definitely have real-world consequences,
Mm-hmm.
you know, for sales and brand loyalty.
Yeah, for sure.
Yeah.
And then you've got the whole geopolitical angle,
Oh, yeah.
which I think is, increasingly relevant these days.
Yeah, sure.
Like the risk of tariffs and trade wars and
Mm-hmm.
specifically how China might respond to, actions targeting Tesla or even Musk himself.
Yeah.
Their Shanghai plant is such a huge part of their production.
It's critical to their global operations.
Yeah.
Yeah.
And China's just a massive market for them.
Right. I mean, any disruption to their operations in China,
Right.
whether it's through, policy changes or a shift in consumer preferences because of, geopolitical factors,
Right.
that would have a major impact on their financial performance.
Yeah, for sure.
I mean, it's just a reminder that what's happening in the world
Yeah.
can have very direct consequences
Mm-hmm.
for these big multinational companies like Tesla.
So even with that big drop in the stock price,
Right.
the article still points out that, the valuation is still pretty high.
It's still really high.
Yeah.
Yeah, I mean, a forward PE ratio of 90.
Now, remind me what a forward PE ratio is.
Yeah, so a forward PE ratio is basically the price of the stock divided by the company's expected earnings per share
Okay.
for the next year.
Okay.
So it basically gives you an idea of how much investors are willing to pay
For
future earnings growth.
Okay.
So a high PE ratio like 90 suggests that the market still has very high expectations
Yeah, for Tesla.
for Tesla's future growth.
Yeah.
Which is really fascinating because, this high valuation,
Right.
it's not just based on their current car sales and profits.
Yeah.
It's also reflecting this belief
In all that other stuff.
in the AI and the energy.
Yeah.
It's the potential of those ventures.
Yeah.
That's what's really driving that valuation.
Okay, let's shift gears a little bit now and talk about Rivian.
Yeah.
A company that's, obviously in a very different stage of its journey.
Very different stage.
Right.
Yeah.
Well,
much earlier stage.
For sure. And the most immediate and obvious difference is they're not profitable yet.
Right. That's the big one.
Yeah.
They're not profitable. And that's a big risk for investors, especially in a business as capital intensive as, scaling up EV manufacturing.
Right.
The path from, initial production
Right.
to getting to consistent profitability is really difficult
Yeah.
in the auto industry. And Rivian has, they've definitely had some big losses
Yeah.
in the past few years.
As they've been, trying to build these factories and
building out their infrastructure,
yeah.
establishing their brand. All that stuff costs a lot of money.
But the article does mention that they achieved their first gross profit
Yes.
in the fourth quarter.
That's a big deal.
That's got to be encouraging, right?
That is huge.
Yeah.
I mean, that's a crucial validation of their production efficiency,
Okay.
their pricing strategy. It means that for each vehicle they sold
Yeah.
in that period,
Yeah.
they brought in more revenue
Then it costs to make it.
than it cost to make it,
Okay.
which is huge.
Okay, so that's good.
That's a great sign.
But it doesn't mean that they're making money overall.
Exactly.
Right.
It doesn't take into account all their other expenses.
Right.
Research and development, marketing, administrative costs,
Okay.
all that stuff.
So they're still expecting a loss for 2025.
They are.
Adjusted EBITDA loss.
Right. Yeah.
Now,
yeah.
what is EBITDA for folks who might not be familiar with that term?
Yeah. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It basically gives you a sense of a company's core operating profitability. So,
Okay.
Are they making money
Yeah.
from their core operations?
And Rivian is not.
Not yet.
Not
But
yet.
but they're getting closer.
Yeah.
Yeah.
And that expected loss is still pretty substantial.
It is. It's between 1.7 and 1.9 billion dollars
Wow.
for 2025.
Even though they expect to sell more cars.
Even with more deliveries, yeah.
Yeah.
Last year they lost about 2.7 billion after delivering, 51,500 vehicles or so.
Yeah.
So
So they're making progress, but they got to sell a lot more cars.
they've got to scale up production significantly to
Yeah.
really offset those costs.
Yeah.
But I will say,
Okay.
for balance, They do have a pretty healthy cash reserve.
Okay, that's okay.
They ended 2024 with $7.7 billion in cash.
Okay. So
that gives them some room.
Gives them some breathing room
To, continue investing in growth.
to
work towards that profitability.
Yeah.
So that's something that you as an investor should be, paying attention to.
Mm-hmm.
That cash buffer is really important.
Yeah.
Especially in this phase.
So looking ahead, their strategy seems to be really focused on reaching more customers.
Yeah, broadening their market.
Yeah.
Absolutely.
They're launching that next generation R2 SUV.
Yep, later this year.
Yeah.
Yeah.
And then they've got that smaller, more affordable R3 model coming out now.
Right. Which is really, I think, a direct attempt to the masses.
Masses, yeah. To a much bigger segment of the consumer market than they have been with, their initial offerings, which were more premium priced trucks and SUVs.
So for an investor, the success of those two new models,
the R2 and the R3, is going to be key.
A big deal.
Yeah.
I mean, that's really going to determine whether they can achieve the kind of sales volumes that they need to become profitable. Yeah.
It's also interesting that they've managed to, cultivate this really strong brand image.
They have.
Yeah.
Which is impressive.
Even without those profitable sales figures yet.
They haven't hit those numbers yet.
Yeah.
But they've managed to create this.
Yeah, there seems to be.
This buzz, this excitement, this loyalty among early adopters and potential customers.
Yeah. And that's not easy.
That's not easy to do.
In the car industry.
In the auto industry.
Especially.
It's a long game.
Yeah.
It's expensive.
So the fact that they've managed to do that this early on,
relatively early on, is a really valuable asset.
It suggests
that there is real demand for their products.
And if they can, scale up production, maybe bring the prices down a little bit.
With the R2 and the R3, that brand recognition, it can really translate into, big sales, big momentum.
Okay, so bringing it all together for, somebody out there who's thinking about investing in one of these companies, it really seems like you've got to weigh two very distinct sets.
Two different sets of factors, for sure.
With Tesla, you've got a company that is profitable.
Right.
They're diversifying into all these other potentially high growth,
interesting
areas.
Yeah.
But the stock is still expensive.
The stock is still very highly valued.
And
then there's, Elon Musk factor.
And the geopolitical risks.
Yeah. So,
I mean, the key questions there are, will these other ventures...
Beyond EVs, will they deliver the kind of growth...
That justifies
that premium valuation.
That really high price.
Right. Yeah. And how much will... all these external factors, the CEO and international trade and all that.
Right.
How much will that impact their core business going forward?
Yeah.
Those are the things you got to think about.
And then with Rivian,
it's all about potential.
Yeah.
At this point.
Right. Brand strength,
new models coming out, appealing to a broader market.
But not profitable yet.
Yeah. And that's a big challenge, scaling up manufacturing in a really competitive market. It's higher risk, but potentially higher reward, right? You're essentially betting on them to execute on their plans.
So the author of this article actually owns both of these stocks.
They do.
Which I thought was really interesting.
Yeah.
And they kind of allocate based on their own perception of
exactly their risk tolerance and their outlook on each company.
And that, I think, is a good takeaway for anyone listening.
For sure.
Is you got to figure out
assess
what your risk tolerance is.
What your risk are you comfortable with?
Yeah. How long are you willing to wait?
Time horizons.
For those returns.
Yeah.
And,
how much conviction do you have?
Yeah. Do you believe in what they're doing?
With each company. Yeah. Because there's no right answer.
Right.
It depends on you as an individual.
So to wrap up our deep dive today.
Yeah.
We've really taken a close look at Rivian and Tesla.
We have.
We've seen that they're, in very different places.
Very different.
Financially, they've got different growth strategies.
Absolutely.
Different sets of risks and opportunities.
For sure.
So as you're thinking about...
As you're considering these two companies.
Yeah. in this evolving landscape of EVs and beyond.
And beyond?
I think it comes down to one really interesting question.
Right.
What do you think is going to be the most important factor for long-term success?
In this industry.
Yeah.
Because you've got Tesla.
With their established profitability,
right.
their diversification, and then you've got Rivian.
With this huge growth potential.
With their brand.
And this really strong brand.
Yeah.
So what's going to be the key? That's the question, I think.
I don't know the answer.
I don't know either.
But it's something worth thinking about.
It is definitely something to ponder.
Yeah.
All right.
Thanks for joining us for the deep dive.
Yeah, thanks for having me.
And we'll see you next time.